Hey, if you're planning a wedding, first off, a huge congratulations. It's such an exciting time. But let's be real for a second. Amid all the joy and planning, there's this big, nagging financial question that can really cause some stress. What in the world happens with all those amazing, generous wedding gifts when it's time to file your taxes? Let's dive in and figure that out.
This is the million-dollar question, isn't it? You're getting cash, maybe some beautiful gold, all these wonderful things from the people you love. And then that little voice creeps into the back of your head. Uh-oh, is the tax man going to want a slice of this? It's a totally fair question, and trust me, it's one that gives a lot of couples some serious anxiety.
And you know what? That worry is completely understandable. A wedding is supposed to be one of the happiest times of your life, but it's also a massive financial event. The absolute last thing you want is to be blindsided by some surprise tax bill right as you're starting your new life together.
I mean, this fear makes sense. We generally know that if you suddenly get a big chunk of money from someone who isn't a close relative, it can be taxed as income. So it's pretty logical to think that a wedding, with this huge flood of gifts coming in, is going to lead to a giant tax bill. But is that actually true?
Well, here is the fantastic news. Buried inside India's pretty complicated tax laws, there is a powerful, I mean really powerful, exemption that was basically made for this exact moment in your life.
That's right. The law is actually on your side here. There's a special provision that works like a golden ticket, like a get-out-of-tax-free card for all the gifts you receive specifically for your wedding.
Just to see how amazing this is, let's use a real-life example. Let's say, between all your awesome friends and family, you receive 10 lakh rupees in cash gifts and another 5 lakhs worth of gold. That's 15 lakh rupees in total. That's a life-changing amount of money.
So how much tax do you owe on that 15 lakh? You ready for this? A big, fat zero. Nothing. Not 1 rupee. Just feel the relief in that number for a second. And this isn't some shady loophole. It's written right there in black and white.
The magic behind this is Section 5622X of the Income Tax Act, and the key words are right there. Any gift received on the occasion of an individual's marriage is not taxable. The value doesn't matter. You know that 50,000 rupee limit you always hear about for other gifts? For your wedding, you can just forget about it. It does not apply.
Now, this is an absolutely fantastic exemption, but like any powerful tool, you've got to know how to use it right. To make sure you're totally in the clear, there are 3 crucial rules you really need to get straight.
Okay, rule number 1, and it's a big one. This tax-free status is only for gifts given directly to the people getting married, so the bride or the groom. If a super generous uncle gives your parents some money to help out with the wedding costs, well, that's a different story. That gift is subject to the normal tax rules. This exemption is personal, just for the 2 of you.
Now here's another layer of protection that's always working for you. Even when it's not your wedding day, any gift you get from a relative, as the Tax Act defines them, is completely tax-free. Anytime, any amount. Think of it as a separate year-round tax shield.
So, who's in this special relative club according to the tax department? Well, it's your immediate family. Your spouse, of course, your brothers and sisters and their spouses, your parents, your grandparents, and even your children and grandchildren. Gifts from anyone in the circle are always tax-free.
Okay, this one is non-negotiable. It's your safety net. Look, the gifts are tax-free, but if you suddenly deposit a whole bunch of money into your bank account, the tax department is probably going to have some questions. Having a clear record, like a simple list of who gave what, or maybe a more formal gift deed for really large gifts, is your proof. It proves the money came from your wedding and will save you a world of headaches later.
All right, so knowing the rules is great, but putting them into action is what really counts. So let's put together a super simple playbook to help you manage all your wedding gifts smartly and keep everything stress-free.
Here it is, your 4-step game plan. First, make sure the gifts are made out to you or your spouse, not anyone else. Second, document everything. Seriously, write it all down. Third, and this is a big one, gently encourage people to use checks, bank transfers, or UPI instead of cash. And finally, the fun part. Start dreaming about how you're going to invest this incredible financial head start to build your future together.
Now there's a really critical reason why we're pushing for digital gifts over cash. It's simple. Digital payments create an automatic, easy-to-follow paper trail. There's no question where the money came from. Large amounts of cash, on the other hand, well, they come with a very serious legal warning.
Okay,
I need you to pay very close attention to this one. Under Section 269 ST of the Income Tax Act, it is actually illegal for you to receive more than 2 lakh rupees in cash from one single person in one day for one event. And the penalty for breaking this rule is brutal. It is 100% of the amount you received. So if someone gives you 2 lakh and 1,000 rupees in cash, the penalty is 2 lakh and 1,000 rupees. The best advice? Just avoid large cash gifts entirely.
So let's wrap this all up in a neat little bow. Here's the summary. Any gift from anyone is tax-free, as long as it's for your wedding. Any gift from a close relative is tax-free always. And any cash gift over 2 lakh rupees from a single person, that comes with a massive penalty, so just steer clear of that.
At the end of the day, this tax exemption is so much more than just a rule in a book. It is a financial launchpad for your new life. By understanding how this works, you can start your journey together on the best possible financial footing. So the real question isn't just about avoiding taxes. It's about what you're going to build with this incredible head start.